Trump's back, tariffs are here, then gone, then back again. And if you're renewing your mortgage in Canada in 2025, this stuff absolutely affects you. It could directly impact your rate, your payment, and your overall financial plan. Most Canadians don't follow US trade policy, and that's totally fair. But when it comes to your mortgage, your next purchase, your sale, or refinance, what happens south of the border matters more than you think. In this video, I'll break down what tariffs actually do, how they impact inflation, why that hits interest rates, and what you need to be thinking about. Whether you're renewing, buying, selling, or you're just trying to hang on to your cash flow. Let's simplify this. A tariff is just a tax the US placed on goods coming from other countries. Trump used this tactic big time during his first presidency, mainly targeting China, and he's brought it back. Now, with tariffs already in effect, we're seeing increased costs across the board. American companies are paying more for goods, and that's driving up prices, which means more inflation. And when US inflation rises, global markets, including Canada, feel the impact. Shipping and manufacturing costs climb, supply chains tighten, materials get more expensive, and it puts pressure on Canadian prices, which means our central bank has to act. Let's say you locked into a mortgage at 1.89% during the pandemic. That rate is long gone. You're renewing in 2025, and now you're staring at a rate above 5.5%. If you're on the variable rate or planning to buy, you're stepping into a very different environment. Lenders are pricing in uncertainty and risk, and tariffs play a part in that. So this doesn't just impact renewals. It affects buyers trying to qualify, sellers trying to move, landlords trying to refinance, and investors calculating ROI, or return on investment. We're already seeing inflation tick up. And with tariffs confirmed, pricing pressure is going to build, and that's going to show up in your mortgage. For people renewing, higher payments. For landlord, tighter lending guidelines. For buyers, smaller budget. For those at risk of job loss or stuck in static variable rate payments, this could be a real squeeze. This environment doesn't wait for you to be ready. You've got to move before it moves against you. This is especially critical if you bought during the pandemic, if you're carrying other debt, you own a rental property with financing coming up, you're on a static variable rate mortgage, or you're already tight on your monthly payments. A half-point increase now isn't small. It can be the tipping point. So here's what I'd recommend. Know your mortgage terms and timelines. Don't wait for the lender's letter. Start your research early. Understand your home's value and your equity position. If your value's gone up, you might have more flexibility than you think. If it hasn't, we can work with that. You just need the right strategy. And if you're in the market, buying and selling or investing, get clarity on your numbers before the next rate change hits. If you're thinking about renewing, refinancing, or just want clarity, I'll pull a home equity report or do a full mortgage review for free. No pressure, just real numbers. Click the link below if you want honest, no fluff mortgage content that makes sense in this crazy market. Please hit the subscribe button.